everyone, and thanks for checking out my channel. Tonight I'm going to have a look at each specific market for WTI or natural gas just alone, as I don't have actually many news on this and I'm already in position. So I'll basically just run through all these markets for the positions I actually hold and the one I'm looking at adding up. Should I actually get the right signal? So I'll be starting having a look at WTI quickly. As I was mentioning in many videos before, I'm still looking at the downside on WTI, but was expecting to get some range bound trading over the coming days or even potentially weeks, and that's pretty much what happens now. So we are locked into this trend range between 39 and roughly 41. As we could see last week, it's weakening a little bit, so we make actually lower highs on any attempts, but it's very volatile, which is often the case when we're reaching the top. A lot of volatility before we get actually proper direction. My opinion is that we are going to break lower. Either it's going to happen next week or not, it's really hard to say. We can still continue like this for quite some time, staying within that range without breaking the 39 level. So the key level is 39. Should we actually get next week a little bit of an upside? Also, there's not much positive that did happen over the weekend, so I'm not too sure, but still we can go back up 41. I believe that's the new contract anyway, so we're going to open somewhere at 41.10. Potentially we could push slightly higher, say 41.2, and then I would expect the selling pressure to resume, attempting once again to break the 39 level. So that attempt on last week did fail at 39.6, so definitely we have buyers in that area, so it will take some time to actually break. I doubt it will actually go through like this, but potentially something like that before we would actually do a proper break to the downside, and reaching the 37 level has been tested many times. It's still the inverted cup handle figure we could have here, so I still believe we are going to check this. One reason, if we zoom out on the daily chart, is that big daily divergence. I've been mentioning that one for a really long time now, almost since the peak. First divergence did actually show end of June, so that's been quite some time. So we had that divergence in place here. We broke here the rising wedge really nicely here, and now we are consolidating on that 37 level, but the divergence not cleared up. We need to reach lower level. I think 34.5 to me is the objective to actually clear up that divergence. We could actually see a push lower to 32, potentially 30 if we get any momentum, but yes, at the moment we don't have a proper trigger to actually get that move down, so it's really taking time to build up. And between the good news, we still get some upside that's actually supporting the price. If we look at the quote report for crude oil, a very sharp rejection, open interest here during that move to the upside. So it didn't actually move that much, was more the 39 and closing to 40 for that week. So a very drop of open interest to me doesn't really show a lot of strength in terms of the move to the upside. It's been fed up very likely, but by the managed money closing a long position and potentially doing some short covering as well. We could see that the retail traders are still adding to their long position in that range, and together with other large funds. So it's not properly either bearish or bullish. I think the managed money reducing long is clearly bearish, but still we don't actually see that moving to downside very sharply yet. So interesting to see if next week we get some more action to the downside, or potentially a break higher. I highly doubt that we're going to break 41.5, so that's why I set that my stop loss for the short position a bit higher, above 42. I think it's going to be safe enough for now. If we look also on the longer term, on the quote and report, we can see the trend here is actually for managed money to reduce their long position, not accumulating under that level. So to me, again, the argument for that inverted cup and handle is more valid than having some accumulation under 41, say 0.5, I think it is, which I think wouldn't look like this. We wouldn't have some deep move to the downside going that low here. If we were to accumulate, we would have some triangle actually pushing to to that limit without having that kind of drop down. So yes, next week will be interesting. Maybe no more action here, and we'll have to wait for another week, but I believe that situation will have to sort out very quickly, and that will depend on many things, but the fundamentals, in my opinion, WTI are definitely not pointing to the upside. Now looking at natural gas, that's also market that's been interesting to trade since the narrative around it is that basically many traders are trying to catch the winter trade now. They're positioning and buying the dips, which I believe is still extremely risky because the first thing, winter is forecast to be relatively mild, except in the north, but where the demand is the highest, and we are really unlikely to see major spike. Even the polar vortex are completely unpredictable, could happen even only in January, so it's only another 2 to 3 months to go to support that price at that level. Despite having a massive contango, we are reaching now 20% between November and December. That's very large. That will put a lot of pressure next week to the downside. Of course, on the front months contract, that will start to put pressure also on the next months. And yeah, I think at that point December will get into pressure. So we've seen last week, end of the week, some significant drops. So we're now sitting on a trend line for that new contract here. Should we have a 265 breaking down, that could be some sort of an opening for a larger move to the downside and close that gap at 2.1. We're still having some support in the middle at 2.4, but there will be a little less should we actually break that level. As we can see here, we got that divergence. That's on the 1 hour chart. That's very reliable usually on natural gas. Didn't reach the potential, but should we actually get down to 2.6, we would have broken that level. So definitely a very negative sign. If we look at the quote report for that period of time, that went from 2.5, large gap to the upside, and closing 2.77, so that's definitely a clean move to the upside. And we can see that despite that move, the open interest dropped, which is definitely not positive. Was potentially a lot of short covering by the managed money, didn't add so many longs. We could also see that other funds did actually accumulate short here. Even the retail traders did actually accumulate short on that move. That was a little bit counter trading this, but still we also see that the swap dealers, they are starting to edge for lower prices. So in short, that report to me is relatively bearish, with the rollover coming next week, showing still a large contango. I really doubt that we're going to see anything major to the upside. So we had these two trend lines, we're actually capping some price action. I mean, that one could actually go a little bit higher, somewhere there. But that level, which is 2.85, should be safe. Should we see any attempt to the upside, should we break down, we could actually see some acceleration to the downside very quickly. Should we have any news, again confirming the weather is not going to change, then we're going to get any cold blast coming in the coming days or weeks, that will be significant negative for natural gas, and to see some lower level. Now looking also at copper, so I'm also holding short position on this. It's been a difficult market. There's been a lot of speculation about strikes in Chile, and also with China still ramping up copper usage for electrical vehicles, some stuff like this. But that market has been losing momentum now for quite some time. So we can see on the daily chart because of massive divergence here, and the moves we had here are actually still inside that range. They are not able to actually break any higher in terms of the momentum. I believe this is only a matter of time until that market will actually go down significantly. For now, it's holding on at 3.306, with the pivot point is actually holding somewhere about the $3 level. So that level will be key. Should we actually see some new attempt to break it earlier next week? So we have some sort of a double top here. It's almost a triple top if we look a little bit earlier in time, but it's, in my opinion, a matter of time until we actually break down. If we look at the 4 hours, so we can see that trend line got broken as usual recently with copper. When we broke the trend line rising wedge, we did actually retest it once, even the second times later, which is really painful for short position, as you need to hold it and having to enter the new retest here. So hopefully we won't see any break higher than 309 for short position, and get some move to the downside. So we can see here between that point and here there's a small high, but we can see that the momentum is completely gone. There's just absolutely no momentum to the upside on that last move, despite that really large candle. To me, again, very negative for copper. If we look at the quote reports, that's contrary to just what I'm saying now, relatively bullish. So as we can see, the managed money continued to accumulate long. Significant long position here that could actually turn against copper should it actually start reversing it. I'm not too sure if this is near record. I'll actually check this just right now. So checking copper, yeah, that's standing now roughly 80k net long. If we look, yeah, that's the 3 years contract, so 3 years period, so that's very high. They went already above 100k, but still this is very high. So typically, usually when we get reversal, it always happens when you get the managed money holding extreme positions. As we can see here at the low, that was that point here. So that one of course was really extreme, but even then here when they did actually start holding negative close to minus 100k, did reverse sharply to the upside, and we had the same thing when the price was holding very high above $3. It was back in 2018, so we got that sharp reversal when they did actually hold above 100k. So there's a bit more room to go. Potentially we could do another retest a little bit higher, but I think again this is a matter of time until that market will actually drop significantly. Retest 2.84, but more important with that large divergence that we're having from that spike here, we could actually go as low as 2.70 if we don't actually see a proper reversal that would actually break lower, but 2.70 is the target for that swing. Looking at nickel, that market also a little bit different, because I think the bull trend is quite obvious, but still I think it's reaching exhaustion, at least for that move here. So I did open half short position here. Reason is that we got that really big, just remove this, really big divergence from that spike here that will actually pointing for 15,000 reversal or revisit quickly, but I believe we are going to push this a little bit lower because that loss of momentum is really big. And if we look at the 4 hours here, so of course we're having that trend line running here, major support at that area, so 14,500 I believe will be probably holding, and if we can get some nice divergence similar to the one we got there, could be a potential for a long position should we actually get to that level. But that should be a relatively easy trade. I'm waiting for another push, potentially breaking the recent high, potentially to 15,900, 16,000 to load second short and get that correction to the downside. That could be interesting. Also looking at the coffee, still holding a long position, so we are back now on a key trend line on that level, but didn't reach the low on the RSI in terms of the momentum, so there's still a chance we can actually push this lower to 104 quite easily, and retest or retouch once again that the upper end of that downtrend channel that got broken previously. So I'm still holding half a position on this and waiting for lower price to actually load the second one, or of course a break above that level to actually load up another position. But I think we still need to be a bit patient with coffee. The reversal is in progress. There's no reason to believe it's invalidated, but that will take time, and the price can still push a little bit lower before it does actually reverse to the upside. Now looking at corn, the grains have been relatively strong despite major short signals pretty much everywhere. As we can see on corn here, we got that massive divergence on the daily chart that did actually trigger from 377 on that spike up to 390, and that's for short-term correction down to 350, but potentially a complete reversal of that figure because we'll be breaking that rising wedge that's got some sharp angle here at the base. So the first target for that one here on the break would be 350, but very likely, as usually, corn is moving on swing quite directional, that we could actually go down and revisit the 300 potentially. But I think first objective 350 looks to be a quite short-term thing, but we need first to confirm a daily candle that could be red on Monday. That would actually make it for a nice evening star. That would actually confirm for good that we're going down and not attempting to revisit higher level. But at that point, as we can see, the RSI trend line doesn't actually leave a lot of room to the upside, so even if it does attempt to move higher, it will be inside that wedge very likely, but unlikely to break higher. There's just no, the momentum's just gone for this, and too likely to actually break to the downside. So yeah, that's about it. I'm gonna do another check midweek, potentially next weekend. Should I actually close any position or have a new market I'm interested in opening large position or accumulating, then I look a bit closer to fundamentals and things like this for WTI or natural gas, but just not worth doing it this weekend. Hope you found it useful anyway. Thanks for watching, and I speak to you soon. Cheers, bye.